Good evening, this is Giuseppe Basile. I'm the Analyst Trader. You can find at the blog FibonacciStalker.com. I also post regularly on Twitter using the @FibStalker nickname. Good evening. Today is Sunday, March the 17th, 2013. It's 6:20 p.m. Italian time, and this video is part of my FibStalker newsletter I'm going to send out tonight. In this video, I make a weekly review and forecast for the EURFX currency futures contract. What you see on the screen is the weekly chart. In this kind of videos, I like to start from the weekly chart, so longer term time frame, and then in this time frame I like to show the important levels of support and resistance, as well as the latest development when price reacts to these levels. And then I like to drill down into the daily chart and see what we could see in the coming days and weeks. So let's start from the weekly chart. Those who follow me know that we identified an important level of support that worked now for some time by tracing this Fibonacci retracement from the lows in 2001 to the highs in 2008. And this trace identifies this 121.40 area. It was 121.30 area before, when the continuous contract was aligned to the March 2013 expiration, but now it is aligned to the June contract. So this is the reason why you see this different value. But with relation to price development, it has this level has the same meaning. Every time price came down into this level, there was participation on the upside, and this participation was capable of breaking the sequence of measure move lower. It happened in 2010 when price climbed above the 127.50 level, and it happened again in 2012 when, after trading the 121.40 area of support, there was enough participation able to break this 129.130 level here. And those who follow me know that when after that happened, we have been looking for longs, and we identified this level of support, providing support in the 127 area. Basically, this support level, as we can see, was able to actually push price higher into the 134.50 level, but price was never able to make it all the way up into the second target, the 138.40 level. What happened is that the next extension long failed, and that decreed the start of this move lower. Now, at the moment, we are actually testing an important level. We are testing the all the way halfway back from lows, and we know from our method that we always have some kind of participation from these levels, and this can also be used to set up some very effective risk-free trades here, because as we get a reaction always around these levels, then it's possible very easily to get free trades from these levels. Now, we still don't know whether this level is going to be retested. In my analysis, I believe it's possible that this level is will be retested. Maybe we are even going slightly lower this 129 area of support. And the reason for this is that I believe the dollar hasn't reached its resistance just yet. But as usual, there are two different scenarios, so it's important to carefully observe price action in the coming days. So moving to the daily chart, just want to remind you that last week we had the failure of this level, and that happened actually. This was the last measure move lower with a resistance 130.70, and we hit 129.80 into the pip here, and then we had the next measure move, which was traced from the highs of the last move to lows, and on Thursday we had the violation on the upside of this 130.20 level, which was the level we were watching. Now it's possible. Now there are two different scenarios I see here. We could trade slightly higher here, and maybe even into the this 130 area, even slightly higher. Maybe this 100-day moving average 3140 is going to offer resistance here, and then we come lower for a retest of this area of support. This area of support, as I said before, is identified by trace from the July lows last year to the February highs here, and that's located in the 129.07 area, 129.10, and we traded just few pips above this level. What can happen here is that we actually go higher to 130, 140 at the beginning of the week, and then we retrace lower, and we can find support at two different specific levels. The first one would be the 129.80 area, and if we move below 129.65, then it's possible that we can retest this 128.84, and based on the kind of participation we will have at these levels, we will know whether we continue lower below into the 127.14 and below that, or we just bounce and we start the new leg higher. So there are very bad news coming out from Europe at the moment, with the forced withdraw from bank accounts in Cyprus as well, and but if you go back historically, you go back on this weekly chart, we can see that the euro has been going up also during the euro crisis. So I don't see a problem for the euro to keep moving higher here. So of course we will need to see how price behaves this week. If we have support in the 128.80, if we get there, I think we can start to move higher with the dollar starting moving lower, because you have to remember that the euro trades against the dollar in this pair, and the Fed is spending $85 billion every month to buy back debt and MBS, so toxic assets. So this is it for today. If you are not a subscriber of my newsletter, I suggest you do that. Just go to my website, and on the left side you find a picture. You can click on it, and in 10 seconds you can just provide the information, and I'm going to send this for free. This video is typically published on the blog with 10 to 15 days delay. So if you want to get these videos and forecasts as soon as I publish them, just subscribe my newsletter. Thank you very much for your attention. I wish you a very good end of the weekend and a great trading week next week. So thank you very much for your attention. Bye bye.